Tensions in Ukraine are rising. There's a risk of a war. However, that remains as a distant likelihood because diplomatic efforts remain, and they're very strong, and everybody loses in this scenario. So in a scenario of all-out war, and even in a scenario of prolonged tensions, Russia, the European Union, the United States, and the world, all of them suffer. How? First, commodities. Commodities are rising in an environment of a slowing down economy. Commodities are rising also because there's a tremendous amount of excess liquidity that is going to relatively scarce assets. That added to geopolitical tensions and the supply-demand risks, add to inflationary pressures that are likely to remain stronger for longer if this continues. Second, because the impact on growth, which was already being revised down before this risk, is very severe. In the case of Russia, an all-out tension with rising inflation means recession, even with higher oil prices, because its imports rise dramatically, its exports are lower, and the economy suffers from what is already a very elevated level of inflation. In the case of the European Union and the northern countries of the Eurozone, it means stagnation for sure, because the impact of sanctions, if nothing happens, is also important on the countries that impose those sanctions. It is very aggressive on Russia, obviously, but very important on the countries that impose those sanctions. Russia is a very big trading partner of the European Union. That is likely to lead to much lower growth, much more significant inflationary pressures, and obviously slow down in and weakening of investment and business consumer confidence as well, and in the United States, elevated inflationary pressures even with rate hikes. If, on top of that, central banks are likely to step down on the decision to hike rates and to reduce repurchases, that is even more inflationary, and the risk of stagflation that we mentioned in these videos a few months ago increases in this environment. It is not good for Latin America, and it's certainly not good either for Africa, because food prices, energy prices, and countries with twin deficits see their currencies weaken as well. So our bet to be long the US dollar, long US assets, and out of cyclical names remains. Thank you.